Thank you for joining us at xm.com for this Forex Preview video. We'll be looking at CPI data out of Japan, where inflation is expected to have reached a 40-year high. But how could the Bank of Japan respond? I'm Cristina Marujos. Joining me today is our investment analyst, Cristina Partenido. Cristina, in recent weeks, we've heard Bank of Japan officials being open to the possibility of policy normalization. But with investors expecting inflation to have reached a 3.5% year over year, do you think this could be the trigger over at the Bank of Japan?
Hi, Christina. It's nice to see you here. That's right. The Bank of Japan has finally shown a sign that it's seeking to cut stimulus. Of course, the central bank's chief keeps defending the super accommodative monetary policy, although other major central banks are well ahead in the tightening cycle. I can say they're probably in the some of them are in the last part of that phase. They're even thinking to slow the pace of rate increases. Well, the Bank of Japan has clearly stated that it's not thinking to raise interest rates in the short term, but Mr. Kuroda admitted that the yield curve control may become more flexible in the future. The central bank's latest summary of opinions also revealed that policymakers are now more open for policy normalization. So I think a sharper inflation print inflation increase could intensify the debate for a hawkish change. Probably the central bank will keep policy steady this year as investors project, but the data could affect expectations for next year. Now, Mr. Kuroda has actually provided a key information recently, saying that there will be no change in policy until wages grow along with prices. Some officials from the government said that any wage structural changes may take time to apply, but the next wage debate with key tech companies and labor unions is scheduled for March, and that could be crucial to determine when the switch to a tighter policy will take place. Kuroda will also resign in April, so I think that spring could be a critical period for a policy review with the new Bank of Japan chief.
Turning to the yen now, it has suffered earlier in the year, but it looks like its fortunes might be changing, especially if the Fed steps back from its aggressive rate hikes. But what could the market reaction be for the yen moving forward?
Indeed, the downfall in the dollar helped the yen to gain significant ground and finally bounce from 32-year lows. Though the problem here is that if the Bank of Japan keeps policy settings super accommodative for the economy and suddenly shows no intention to reduce monetary divergence with the Fed and other major central banks, I think it may soon return to losses. Intervening in FX markets also proved an inefficient tool to support the currency. So unless the Fed becomes more conservative than we expect next year, or inflation surprisingly shifts significantly to the downside, there's barely any other option left to help the yen than a tighter monetary policy in Japan.
Cristina, thanks so much. This was a Forex Preview here at xm.com.